In this video, I'm going to show you a TradingView indicator that vastly improves the Ichimoku Cloud and show you a day trading strategy that absolutely destroys the 5-minute chart. The Ichimoku Cloud indicator is highly regarded as one of the best multifunctional tools for traders and is personally one of my favorite indicators. The term Ichimoku, meaning one glance, comes from the trader's ability to identify areas of support and resistance, trend direction, measuring momentum, and potential trade signals, all in one quick look. The strategy I'm going to show you works on multiple financial markets where there is sufficient volume and market participants. For this example, we're going to be looking at the US 30 Dow Jones Index on the 5-minute chart. Now we're going to add 3 different indicators on our chart. Go to TradingView and go to the Indicators tab and type in Super Ichi by Lux Algo. Add it to your chart and go to Settings. We're going to untick the Chiku span line and we're going to leave the rest at the default settings. The Super Ichi indicator is a modification of the popular Ichimoku indicator using the equally popular Super Trend indicator as its core, thus no longer entirely relying on calculations done over a fixed window size, but instead relying on the average true range and the trend detection method offered by the Super Trend. Unlike the regular components of the Ichimoku, based on rolling maximums, minimums, using the Super Trend here allows smoother components and makes it less prone to whipsaw signals. The second indicator we're going to use is the Sessions indicator. Go to the Indicators tab and type in Sessions. We're going to use the one by Lux Algo. This strategy involves only trading within the New York and London session. So go to Settings and we're going to untick the Tokyo and Sydney sessions from the chart. Then we're going to change the start time of the New York session from 13 o'clock to 12 o'clock. It may be different for you depending on your time zone, but you want to make sure that New York Open is set to 8 o'clock a.m. Eastern Standard Time. We're going to add one more indicator to the chart. Type in Chandelier Exit. And it's this one right here by Everget. Go to Settings. Under the Inputs tab, untick the buy-sell labels. Go to the Style tab and untick the long state and short state fillings. This is what our chart should look like. Be sure to stay till the end of the video because I'm going to give you a few tips to increase your win rate and profit with this strategy. This is a New York and London session breakout strategy that is loosely based off of the original Ichimoku breakout strategy. We use the Super Ichi and Chandelier Exit indicator to give us trend direction confirmation. If price is above the cloud and there is a green chandelier exit line, we look for buy setups only. If price is below the cloud and there is a red chandelier exit line, we look for sell setups only. We only trade during sessions when the highest probability of breakouts occur. Then all we have to do is wait for the breakout to happen and take our trade. Here's what that looks like in detail. Buy setups. To enter a buy trade, we need 3 conditions to be met. Condition number 1, we need the blue Tenkan Sen line above the orange Kijun Sen line. Condition number 2 is we want our chandelier exit line to be green. Both conditions indicate bullish sentiment. So, our third and final condition is we need price to break out above the cloud, and we enter our trade at the close of the candle. We place our stop loss at the bottom of the cloud or at the chandelier exit line, whichever is closer. Our take profit is going to be 3 times our risk. Here's another setup. The blue line is above the orange line, the chandelier exit line is green, and we also have price breaking out of the cloud. We enter our trade at the candle close and shoot for a 1-to-3 risk-reward ratio trade. Here's a few more examples. Sell setups. For sell setups, we need the blue line to be below the orange line, and we also want our chandelier exit line to be red. Once both those conditions are met, we wait for price to break out below the cloud. Stop loss is placed above the cloud, and we shoot for 1-to-3 risk-to-reward ratio. Here's another sell setup. We have the blue line below the orange line, and our chandelier exit line is red. We now have all those conditions met, and once price breaks out below the cloud, we enter the trade at the candle close. We place our stop loss above the cloud, and we shoot for 1 to 3 risk to reward ratio. Now I'm going to give you a few tips to improve your trading, profit, and win rate with this strategy. Tip number 1. Before the session open, identify levels of support and resistance from the previous session. This information can be used as additional confluence as price breaks these levels around or at the same time as your trade entry when price breaks out of the cloud. Tip number 2. Since this is an intraday strategy that uses a fairly tight stop loss, a broker or prop firm with decent leverage, low fees, and low spreads is absolutely necessary to fully maximize the profits from this strategy. Not doing so will result in having most of your profits eaten up by higher spreads and commissions. Recommended broker and prop firm linked in the description. Tip number 3. Third, since this strategy is executed on a lower time frame, it is important to forward test your trade execution on a demo account until your technique is on point before trading the live markets. You want to practice until you make little to no mistakes upon execution. Otherwise, you may lose trades that you shouldn't be losing. This strategy does take quick execution, so you want to make sure that your entries, position size, and stop loss placements are on point every time you execute a trade. Tools such as Magic Keys or a trade manager make placing trades with perfect position size based on stop loss much easier and near instant. Links to both of those in the description. Tip number 4. Only take 2 trades max per trading session. If you lose the first trade, wait for price to break out in the opposite direction. If that trade loses as well, stop trading for the day, because that indicates that price is either too choppy or price is trading in a range. The essence of our Super Ricci breakout strategy is to catch the potential breakout of the start of a trend and profit from the initial move. If price is ranging, it's clearly not trending, therefore we shouldn't be forcing trades during those ranging market conditions. This rule can also help traders who suffer from FOMO and revenge trading. These are some additional quick-fire modifications or ideas that have potential for an increased win rate or profit that you can test for this strategy. Limit this strategy to just 1 trading session instead of both New York and London sessions. Since this is a US-based index, the New York session is preferred. Instead of a fixed risk-to-reward ratio, use the chandelier exit line as your trailing take profit for potential home run trades. Rather than trading the initial break of the cloud, trade the break and retest instead. This may or may not result in an increase in win rate and a lower trade frequency rate. I hope you found this video helpful. Remember, this is not financial advice. This video is made for educational and entertainment purposes only. Be sure to do your own back and forward testing before trying this strategy out in the live markets. If you enjoyed this content and haven't already, smash the like button and subscribe so you don't miss out on future content. If you're interested, we also have premium content on our website at thetrademeta.com. See you in the next one.